In today's one-on-one episode, the 43rd, I'm honored to have Simon Dixon with us, given how much knowledge he imparts and how beneficial his efforts have been to the Bitcoin community at large, to the point that unquestionably he is one of its most valuable assets. Simon, like myself, is a former banker in the legacy financial market realm who has become one of the cryptocurrency community's most diversified and influential investors. Through his Bank to the Future platform, his companies have invested more than $500 million in the space and likely will dramatically increase this amount in the coming years. To that end, Simon, the man who last month told Adam Meister he is offended by the thought of selling Bitcoin, welcome to this extremely well-timed episode of One-on-One.
Thanks for having me, Andy. It's always a pleasure.
Absolutely. So when Simon was last on the show, it was early May. Bitcoin was $9,400. And literally 1 hour after we concluded, the Mt. Gox trustee moved 6,000 coins from his wallet, prompting the price to plunge back to its February lows of around $6,000, i.e. $100 billion market cap. Since then, not a shred of materially negative Bitcoin-related news has surfaced, and to the contrary, hash rate has reached record highs, the Lightning Network is experiencing dramatic growth, and it's become patently obvious that neither Bcash nor any other crypto can usurp Bitcoin's principal use case of digitally replacing physical gold. Moreover, as of late June, it was learned that the Mt. Gox trustee, whose remaining holdings for all the hype are worth barely $800 million, is done selling. This as fiat currencies from Argentina to India, Turkey, and Venezuela have steeply declined, while its demand for actual physical gold, as measured by U.S. mint sales, has essentially fallen to all-time lows. Yet, Bitcoin and the entire crypto sector has remained under intense selling pressure, albeit normally so in the context of previous cyclical declines, time and again challenging the February lows, which yet again held staunchly last night, which at the $100 billion market cap level represents a significant institutional and psychological level. Ignoring altcoins for the moment, whose principal catalyst is the Bitcoin market, tell us, Simon, why you think Bitcoin is having such trouble establishing a bottom. And in your view, did last year's dramatic advancements, highlighted by the scaling debate victory, yield a permanent upward revaluation, or to the contrary, an investment bubble with the potential for further dramatic declines?
Well, I guess the bubble-like properties of it is that it just happened so goddamn fast. I mean, we were all pretty cautious about it. We're all fundamentally buy into the vision that Bitcoin is valued at a lot more than $20,000. And so really the fundamentals often dictate our philosophy around how bullish we are about Bitcoin. But then the technicals and the short-term trends and the market psychology and the fear and the doubt and everything that come in, I guess many people might see that as the longer-term trend, but the reality is that the fundamentals are still the same. We just have these corrections in Bitcoin. And so I've personally seen Bitcoin crash from $30 to $3, which represented a 90% correction. I've sat through Bitcoin crash from 1,250 to 250 after the Mt. Gox fiasco. And now we're seeing 20,000 to we're around about 6,000. So, I mean, if you look at that, that was a 90% drop. That was the second one was a 75% drop. And it seems like this one is approximately a 70% drop, depending on where we go next. But none of it really matters, because what these drops represent is the market's uncertainty around the fact that Bitcoin might be as big as we all think it will be, as fundamentally important in the world as we believe it will be. Not too many people in the world have come to realize that. So, with Bitcoin, people start to come in at different levels. And their certainty around whether it will succeed or fail tends to be correlated to how much they've understood the economics versus how long they've actually been around and to see these price actions and movements. And so for someone, like when we've been around for a while, this is what seems like normal behavior. But if you're experiencing this cycle for the first time, it can actually, bring out all your fears about all those people that told you, Of course, nothing can disrupt the traditional financial system. Of course, we can't have anything but the status quo. Of course, Bitcoin's a Ponzi scheme, a scam, and a drug dealer's currency. And all those fears and uncertainties come out to people that have come on at different levels. The long-termers understand that this creates a real great opportunity to come in again. And those who are earning in Bitcoin get the opportunity to accumulate a lot more Bitcoin because they're earning at these lower rates compared to what they're there for. But it always comes back. And the reason it always comes back is because we've already seen that Bitcoin is possible to be $20,000. The market doesn't know that it's possible to be $100,000 or $1 million yet. Those are unknown things. But once it has hit $20,000, it's just a question of getting through the bear market, getting out all the people's that are selling based out about a fear, which will be the same people that buy Bitcoin at $50,000 and $100,000 because of the fear of missing out. And these are these will be the same people that will be looking to do that. So this is just market cyclical behavior. You can't compare it to the stock market or any of the traditional markets that have much deeper liquidity and less uncertainty around and less disruptive nature around whether they're going to succeed or not. And so really just you're either going to see this as an opportunity to accumulate, or you're going to see this as bringing out your greatest fears that maybe this Bitcoin thing isn't going to succeed. And that will determine what you will do from here and the financial outcome you get from here. And so really, I have no fear about this. I have no doubt in my mind that this will return again. How long that will take to happen is really just a question of how, and this is also a great phase for building. This is the building phase. This is where we stop trying to firefight hundreds of thousands of support tickets and all the things that everyone was trying to do to onboard the world into Bitcoin, and start focusing on the technology, the services, the infrastructure, while people are less knowing at one point this is going to turn around and everyone's going to have hundreds of thousands of support tickets again, and everyone's going to be asking in a panic, how do I buy Bitcoin under the worst circumstances when everyone else is trying to buy Bitcoin, meaning you're paying a higher and higher price for it. And so, we have to go through those cycles to build the technology to scale. And we're now at the building phase, and this is where we really implement some of our scaling solutions and usability challenges to take us to the next phase of growth.
Wow. As usual, Simon has me writing tons and tons of notes. He's the all-time leader in creating notes when I'm doing my podcast. And again, you talk about the size of the decline, 70% or so. I looked at the last, I think it was 4. There were 4 big pumps in Bitcoin over the years. I don't even like the word pumps, but 4 big, surges higher. And on average, they were about 80%. But if you take out, you're going back to early 2011, it's more like 75%. So we basically, it's par for the course. But then again, that course is going to be changing. We will become less volatile over time at higher valuations and less levels of uncertainty because, as you say, still it's a very thin market for all the growth we've had, and there's just a small amount of outstanding float out there, and there's a lot of uncertainty to the large majority of the world who don't yet understand it. Whereas to people like us, last year when the price was going up, there was a great deal of uncertainty, whereas this year where the price has been going down, in your mind and certainly in mine, there's not really any uncertainty at all, just a matter of when people catch on. And one thing you noted about how we saw that it can be 20,000 and then return to it. Well, people like us who have been in financial markets for a long time, we know very well that often, more often than not, when a market on the upside or downside hits a level and then backs off it, it usually returns. And that's why it continually returns to $6,000 on the downside, but doesn't seem to go under, and it will return to $20,000 in the future, and it's just a matter of when. Now, I want to talk about a somewhat controversial topic that I have taken a material amount of flack for, simply for broaching it, because, God forbid, I am the Bitcoin maximalist. I can't talk about anything else but Bitcoin, which is whether or not altcoins have proven their staying power amidst the recent crypto carnage, by not only holding values well above where the bubble started, but irrespective of whether one views market cap as a legitimate metric, they have also held up well versus Bitcoin. And I understand there's been more coins added. That's part of it. In my view, most will fail to generate momentum due to their lack of use case. However, some will undoubtedly be big winners in the coming years, just as they were in the past 12 months. As for you, Simon, how do you view the altcoin sector in general, 6 months after the bubble burst and nearly a year after they became a material part of the overall crypto market capitalization?
Well, so this question comes into your understanding of what you think Bitcoin is. To me, I think it's perfectly congruent to be a Bitcoin maximalist, but also think that there's other user cases that crypto can solve. That Bitcoin might not necessarily solve. It may solve it. It makes sense that it might solve it as, you know, the only real immutable blockchain out there. But you know, because of Bitcoin's conservatism at making sure that it remains a store of value and the only chance I see the world having of sound money, then it's you know, that creates opportunities for others to come along and do certain things in different ways. So to me, it's Bitcoin maximalism. To me, in my mind, the way that I see it is the belief that Bitcoin is really our world's only shot at sound money. And I totally believe that Bitcoin is our only shot at sound money. I can't see that being returning to gold again. And because of its physical nature, it means that you know, have the challenges that we've had in the past, where central banks can deviate away from how much gold they actually have on reserve and print further money or create further receipts for gold. And therefore, there's always an incentive to actually move away from gold backing and the gold reserve. So,
and Simon, we are going to talk about gold in a second. So let's move on to the next phase of your answer.
Okay, all right. Well, so Bitcoin is, to me, I'm a complete Bitcoin maximalist in the sense that Bitcoin is the only shot we got at having sound money. And so, what is less certain is whether Bitcoin can become a really great medium of exchange because of its scalability. And through, you know, scaling solutions like Lightning Network and the proposed solutions ahead, while I do have faith that these are going to come through and these are going to be great user cases, but that's more speculative and there's less certainty around that. So what that does is it creates opportunities for other people to optimize different infrastructures and different blockchains and tackle different user cases. So Ethereum has got no chance in the world of ever being sound money, but what it seems to have become is the ability for people to fundraise and do disrupt the IPO market by having a blockchain that is less immutable, but at the same time more flexible for people to create these smart contracts. And it seems like the only application at the moment of smart contracts is creating financial assets and alternative fundraising methods, and the things that are actually being produced there. Now, the challenge, as always, is the immutability subject that unless you're using the Bitcoin blockchain, then you cannot guarantee the immutability of it. And so whether we're actually going to see you know, any other public blockchain fulfill that user case is still, the jury's out. So just like we're not 100% certain about whether Bitcoin can fulfill other user cases other than sound money, store of value, and maybe eventually a medium of exchange if it stabilizes when the whole world's using it. It's also just as speculative to know whether altcoins and alternatives can create anything that competes with Bitcoin. And for that reason, it rises faster than Bitcoin because it's more speculative, and it falls faster than Bitcoin. But they're not really competing. They're not really the same things. It's just tackling different user cases. So it seems like there is definitely always going to be a market for speculating on alternatives and entrepreneurs that are going to go out there and try and make large claims about what alternatives they can do. And there's a demand out there for that. And it seems like we're going to have big disruption in the securitization market through these blockchains. But I look forward to seeing whether Bitcoin can fulfill that or whether we actually get something else that can fulfill that as well.
Absolutely. You couldn't have said it better. Look, again, there's so many things here. And I've said before, for instance, that crypto in general is replacing the legacy financial systems. It's not just Bitcoin is going to replace gold or Bitcoin's going to replace fiat currency. Again, we don't know these things will happen. This is what we assume. But my assumption, and yours too, is that crypto is going to replace everything. And so we have both talked about how I believe that stocks and bonds are just as vulnerable as fiat currencies. They are anachronistic. They benefit the few. ICOs are far more, when done the right way, not the way they've been done in the past. I think they're going to be the form of financing of the future. Decentralized, takes the Goldman Sachs's out of it. They will get more efficient, and therefore there's going to be all different kinds of cryptos that do all kinds of different things. And the other thing I also try to talk about is people, again, they you have it exactly right. Bitcoin maximalism has to do with sound money. It doesn't mean that no other cryptocurrencies can exist or that none will be secure or anything like that. Some of them are just plain old going to be investments. You're not going to buy every crypto thinking it's going to be the next money of the world. You buy it as an investment because, like you said, it's speculative. You think that there will be an investment demand for it, which may or may not replace the kind of investments we have today. So again, I think you hit it right on the head. Bitcoin maximalism is going to take a completely different turn in the view of a lot of people, including a lot of people in the Bitcoin community, when they realize that a lot of the altcoins are garbage, like .coms, but a lot of them, including many that haven't come out yet, are going to have uses in the world, and we'll see what happens. But in the meantime, from an investment perspective, if you own Bitcoin, you have by far the best risk-reward profile, because in a risky area, this is by far the least risky. And even if it doesn't outperform altcoins, it's going to probably outperform just about anything that's ever happened in history. So next, a topic that few people have the background to understand as well as Simon, which is pretty much everything, which is the Bitcoin market manipulated? Frankly, I could care less what the US CFTC has to say, as undoubtedly they have an agenda far more complex and devious than merely rooting out fraud. However, as someone who spent 15 years commentating on stock, bond, currency, and precious metal fraud, the latter, which the CFTC comically stated does not exist, there are definitely signs of price suppression in Bitcoin. Like for instance, the entity who for months has relentlessly posted double-digit spoof offers on one of the leading cryptocurrency exchanges. Simon, do you believe anything nefarious is going on with Bitcoin trading regarding naked shorting, official intervention, spoofing, or other sinister means? Or, to the contrary, is this suspicious activity merely a product of a bear market environment, which, when it inevitably reverses, will have the exact opposite effect on trading strategies and patterns?
I think that manipulation is something that happens in every single market, and spoofing and all these things that you discuss is a sign of growth, because it means that it's building the liquidity for people to actually care and create these opportunities short term. I don't think that we're going to be immutable from these types of manipulations, and these manipulations have always been there. If you look at the shenanigans that happen exchanges, if you look at all these different, they will. But does that change my investment thesis? No, I believe that the long-term value will actually prevail here. I believe that the Bitcoin gives you the opportunity to play in the markets of owning your own asset, but it also gives you the opportunity in the markets of playing in bank-like entities like exchanges. And therefore, when you're playing in these bank-like entities like exchanges, you can expect, especially in an unregulated environment, that shenanigans are going to happen, and also expect that more shenanigans will happen in a regulated environment. You have to compare that to the traditional markets, where the regulated markets is where so many shenanigans happened that led to the financial crisis and what happened before. So when someone asks me about manipulation, all of the above happens, but it doesn't change in my mind, the long-term fundamental value that there's only 21 million Bitcoins. Everybody needs them. They just don't know whether they need them yet. Each year, it gets more and more valuable to more and more people in terms of utility. And then eventually, if you're trying to spoof the markets and naked short the markets and take your short-term cut, you might fail, you might succeed. But eventually, those short trades have to get covered, because with short trades, you have the opportunity to lose more than you originally put in, and eventually, the long-term fundamental value will prevail. Can that cause some problems along the way? Certainly can. Are we going to be able to stop it? No. Is it something that should change your long-term investment theses? Well, actually, it should drive you more to long-term thinking, because in the short term, everything can be manipulated and everything can be messed around. But the long-term fundamental value means that these have to get covered, and you don't want to be the person that's left without the Bitcoin, short Bitcoin, and getting on the wrong side of, imagine we have a black swan event in financial crisis. You're short Bitcoin, and we get hyper acceleration in the price as a result of some of the failures in the traditional financial system. Being on the wrong side of that trade could be the difference between bankruptcy and success. So, but there are definitely going to be people that will take those risks, and eventually people are going to have to be on the long side.
Okay, and I'm going to ask one extra part to this question. I'm not even going to give my feedback. I'm going to ask you purely, can governments collude or to suppress the price? Is it in their best interest? And if it was, can they do it? Do they have the means?
Yes, they do have the means if they wanted to do that. But eventually game theory is going to kick in, because what you've got to remember is that the people that have the countries that have the most to lose out of Bitcoin becoming successful are the one with the most power. The one with the least power have the most to gain from being on the right side of Bitcoin and the disruption of the financial markets through the crypto sector. So while the US, China, and Russia, who have very bad relations, might decide to get together and collude, there'll always be a game theoretical incentive to default on that. And as a central bank, I would, you would need to. The best thing you could do probably would be accumulate. Well, the way to survive the markets ahead, even if you don't believe it, is to at least accumulate some Bitcoin and default and renege on that agreement. Because if, let's say, the three most powerful economies in the world are colluding to suppress Bitcoin, then one of them has got a great game theoretical approach. And what, by the way, we're miles away from this. I know that the small central banks are very interested in this. I'm pretty sure that the smaller countries are all hedging, at the moment, and looking at Bitcoin as a way, accumulating Bitcoin as just, even if it's pure speculative bet, that it will actually take on some of the most powerful currencies and financial entrenched interest. And they need to do that. And so everyone's incentivized through game theory to actually renege on that agreement, because there's one thing that we've got here that can't change, and that is that there is this thing called Bitcoin. There's 21 million of them, and it's not politically aligned with any country's agenda. Now, while they might create derivatives of that, and they might create all these things that aren't Bitcoin, but you still got the underline here. And so governments can collude in order to do that, and they probably will at some point. But eventually, there'll be a game theory that will make people renege on that agreement, because the winner at the end is going to be the one that accumulates the most Bitcoin, as we have this sound monetary that I believe will be the base of it's the only shot at having sound money in our system today.
Right. And of course, the 21 million is, of course, 21 million minus the 3 to 5 million that are lost or Satoshi's wallet. And of course, the 2 million that'll take 100 years to get mined. And then the million, how many millions that are sitting in hodlers, cold storage, never to come out. But again, it's, you bring up again those little countries in the game theory. It's always game theory, because for all you know, while the United States is trying to figure out how to hold the price down, they're selling it to Bulgaria or Greece. And in the case of, quote, Europe is not an economic entity. It's a political entity. It's got probably half the countries are pro-Bitcoin, half are anti-Bitcoin. And if you really wanted to hold the price down, you realize that people like bigger countries like Japan, Korea, and anyone else that's looking to, as you say, gain power in the future world is going to be buying. So, throw in the transparency of the Bitcoin blockchain compared to, say, the gold market, which we'll get to in a second, and you realize that governments really have no shot at holding the price down, and most governments probably don't even want to hold the price down. So Next, another topic that amongst Bitcoiners, Simon is perhaps the best person to discuss with, which just happens to be what I am most famous for, although I'm working hard to change that narrative, gold. For 15 years, I saw it as the only alternative to a fiat currency Ponzi scheme gone mad, which frankly is more unstable and inflationary today than at any time since it commenced in 1971. However, in the emerging digital age, I see no reason for gold to exist as any more than a safe haven asset of last resort, given how obviously inferior it is to Bitcoin. Since the scaling debate was won last summer, I very publicly sold all my gold and silver for Bitcoin, and subsequently have gone on record as saying that they have been relegated, particularly silver, to mere industrial commodities, which, given the extreme turmoil we've seen in currency markets, during which precious metal prices have plunged and U.S. mint sales have collapsed to record low levels, would seem to indicate I'm onto something. Simon, in your view, are gold and silver dead as monetary assets? And irrespective of your answer, where will they likely stand in the hierarchy of retail, institutional, and sovereign investors' future monetary investments?
Sure. Well, if we're putting on a very long-term hat here, I still feel that, well, not so much silver, but gold has a role for the conservative person that wants to maintain their value and doesn't want to be subject to fiat currency inflation. And so I still think that gold has that role right now. And for the older generation that is less technically savvy and not willing to learn how to store Bitcoin, or I guess that there'll probably be the same people that would be giving it to custodians, and those solutions will be around. Bitcoin, because the majority of the world still think that it might be a Ponzi scheme, or it might be a scam, or it might be just a currency for drug dealers. While people still think that, it creates a significantly undervalued value to Bitcoin. So you can kind of take where Bitcoin's value as what the majority of the world think about it right now. So in 2017, I think we moved from, to the whole world knowing and having a perception of what Bitcoin is. I think today we still have the majority of the world think what it is not what it actually is. They haven't discovered what it is yet. And so while the world still thinks that, it creates a really undervalued value to Bitcoin. The day that we reach the point that everybody in the world thinks that Bitcoin is legitimate, it's not just a currency for drug dealers, it's not a Ponzi scheme, and it's not a scam, is the day that Bitcoin probably becomes more stable and acts more like gold. Until then, I believe you're going to have hyper growth, whereby the price, you have these crazy, wild upswings, and then you have massive corrections as people get more fear and uncertainty about it. And then it reaches new highs, and we just continue doing what we've seen throughout the entire history of Bitcoin. And so what you've got to ask then is, why would people use gold over Bitcoin? Well, it's a conservative strategy for those that just want to preserve their wealth, not gain wealth, but just preserve their wealth in an inflationary environment. And it's a safe way to actually do that. So if someone's got enough money and they don't really want to make returns on it, then gold is probably a safe thing to do if you don't want to speculate it to try and beat inflation with your fiat money. Whereas Bitcoin is going to be speculative until the day that the majority of the world realize that it's not a Ponzi scheme, it's not a scam, and it's not just a currency for drug dealers. And so that's why Bitcoin will always be a different asset class. But eventually, when the world realizes that, and as more and more events happen that make people realize the value of owning their own money, spending their own money, and sound money, and having a monetary policy based upon savings rather than debt, as more and more people realize that, and the traditional financial system will give us everything we need for everyone in the world and the planet to realize that eventually, over the decades ahead, then eventually you will reach a stabilization of Bitcoin, and Bitcoin can become more of a medium of exchange because it's more stable in terms of making purchases. And at that point, I don't really see the point of gold, because there'll be enough history whereby enough of the older generation that would have just looked at gold and are a bit fearful of Bitcoin will no longer be in the markets at that point. And a whole younger generation would have been brought up around, understanding and experiencing what Bitcoin does, and then it becomes an actual competitor to gold at that time. So very long answer, but in the short term, people that want to preserve their wealth, then gold is a safe way of preserving, and Bitcoin is a way of accumulating and growing. Eventually, Bitcoin will become a stable thing when everyone realizes that. That will just compete with gold and act like gold. And it will be very interesting to see what the user case of using gold as a store of value, when the same store of value exists that can be transported globally. You can own it without counterparty risk. You can spend it as you wish.
Well, how funny is it, by the way, as I look at right next to you, the big book that says confiscation, two big books, almost like a spotlight, and the one right next to it says criminal practices. And these are all things that are inherent to the gold market that have always been, even in the best of times, gold can easily be confiscated. And, the fact that we always thought of it as decentralized, when frankly, the gold supply chain couldn't be more centralized. And trust me, I worked within it. It is as centralized as anything out there. Now, several other things that you said, of course, again, and I've said this a million times, older generations, you'd say it's a conservative strategy for older generations. That's right. Take it from me, who worked 6 years in the bullion industry. The older generations are the only people that own gold. I'm going to say that again. They are the only people that own gold. And they are a lot older because a lot of them go back to the 70s. So, I mean, I would guess that when I was in the bullion industry up until last year, the average client was well over 60 years old. And these people are going to pass on their assets to younger generations who not only have no interest in gold, they're going to laugh at it, but they're going to have no interest in stocks or bonds or fiat currencies or anything. And that's why cryptocurrency in general, for what we were talking about before, is the future of everything, not just the future of sound money. You mentioned that people hold gold not to accumulate wealth or just to preserve it. Well, for one, they haven't, because not only has it fallen in absolute terms for the past 7 years during all this money printing madness, but it's trading gold and silver both at their all-time low in inflation-adjusted terms. And a lot of that is due to the manipulation caused by the criminal practices that we're talking about in those books behind you, which the SEC and CFTC don't think actually occurs. And then, again, I'll just finish it up by, you talk about over and undervaluation. People like to say gold is scarce. Yeah, I guess it's scarce compared to fiat currency, but the fact is there's still $7 trillion worth of it in the world at a time where people are using it less, whereas Bitcoin, there's only 100 billion of it in the world. And actually, as we said before, a lot less of it is available for sale at a time where people will be using it more. So on every front, yes, I do believe if we have a major financial crisis, of course, gold will benefit, compared to fiat currency. But I think you're right. I think we'll see a hyper Bitcoinization, certainly during those times. And even if we don't, that's going to happen anyway to make it until it becomes an equilibrium level that gold reached a long time ago. Next, I want to talk about the potential for institutional Bitcoin investment in the coming 12 months, particularly as I suspect it will. It maintains support at the key $100 billion market cap level. Seeing Goldman Sachs acquire Poloniex via its Circle Investment Fund, CME and CBOE futures trading without a hitch for 7 months, major hedge fund managers like Steve Cohen entering the game, brokerage giants like Fidelity preparing cryptocurrency custodial strategies, and now growing rumors that a CBOE-sponsored Bitcoin ETF created by the huge Van Eck Mutual Fund Group will be approved by the SEC August 10th. It would appear that the wall of institutional money that briefly showed its face in January, when dozens of crypto hedge funds were launched, may well be ready for its second wave to arrive as soon as a Bitcoin bottom is confirmed. Simon, in light of your role in the cryptocurrency investment community and background as a banker in the legacy markets, where do you think institutions stand regarding their current and potential future thinking about crypto? Are we on the verge of a massive inflow of institutional capital, or is Bitcoin too risky for mainstream investors?
Absolutely. Are we going to get the institutional inflow? It's just a question of who's going to be first and who's going to do it fastest. At the moment, you have the hedge funds, which are going in first because they're willing to take the most risk. Prior to that, you had because Bitcoin was this decentralized thing, we had retail running hedge funds, and then running Wall Street, which is unheard of. But that's how it worked in crypto, because we do everything the other way around, I guess. But there's no doubt in my mind that institutions are going to have to get this. In fact, I would put it to any institution that it's your fiduciary duty to actually hedge against some of your traditional financial products, as long as you can get it where it's custodialed in a way that is in line with your fiduciary duties to look after your investors' money. Now, I understand that Bitcoin causes lots of problems for institutions because it gave people the ability to hold the money and store the money on their own, and therefore that creates lots of custodial problems in the legacy financial system. And so they're not going to get in. The traditional players are not going to get in until the custodial solution is actually solved and formed. But that's why the underlying spot peer-to-peer market of Bitcoin is still going to prevail, storing on hardware wallets. The institutional side is going to all do it in a custodial way that meets the regulatory requirements and the responsibilities when holding other people's money. And that market's going to be, I would say that it's their fiduciary duty to protect their portfolios and hedge against their correlated assets as the only uncorrelated asset class. In case of stock market failures, bond market failures, currency market failures, banking failures, and all the different user cases that people are holding Bitcoin for. And so therefore, even if the funds don't believe in Bitcoin, they will still have to defensively, and just like central banks will have to hold Bitcoin, because game theory states that the small central banks will do it first as a way of trying to get an advantage against the currencies with larger power. The same will happen in the fund management industry. If all of these mutual funds and everything is actually, all the trends that we've all heard from all of the most reputable people and commentators in finance state that the liabilities of these pension schemes and everything do not meet, are not going to add up in the future, then fund managers are all going to have to do something differently to kind of hedge against that. And Bitcoin is really a responsible way hold to diversify and hold a balanced portfolio in the turbulent times and changes ahead. So the institutions are all going to be in. The solutions are all being developed. And again, this crash is just a perfect opportunity for the people that want to store it on hardware wallets to front run, as it were, the institutional volume that's going to happen at some point. And when that ETF comes through, and people, that has to be backed by Bitcoin, and there's a responsible way of storing that. The institutions are gonna flood in, and someone's going to be first, and then they're going to all do it just like the blockchain trend, when everyone was calling Bitcoin a scam, and then every bank in the world, a couple of banks just said, we think blockchain helps us, and then every single financial institution in the world then has a blockchain innovation department, just because they don't want to get left behind. The same will happen with the accumulation of Bitcoin in the fund management industry, where the funds are all, a couple of people are going to come in, and then everyone's going to defensively do it in order. And then, that's just inevitable. There's no doubt about that.
Right. Well, of course, to me, I mean, you're spot on with everything as usual. The number one thing, of course, is the size, because that $100 billion is a big deal for the big institutions. And the fact that we keep holding support there shows that there is major institutional interest right now. Just we're still in this consolidation period, so they haven't become more aggressive. And of course, as you said, some of it will be for speculation purposes, and some of it will be forced to be for hedging. And remember, hedge funds, which in this case is a misnomer, they are using other people's money and have very limited regulations. That's why they're able to get in first. But ultimately, we're going to see much bigger institutions investing their own money. So they're a lot more careful with what they're doing. And they will have much higher regulations, such as the custodial relationships, which are being developed right now. And, as for, man, I was writing about the ETF the other day, and, I don't know whether it'll be approved or not. There's going to be a lot of pressure by Wall Street to get it approved, pressure by the U.S. government to not get it approved, but ultimately it eventually will. And when it does, Katie, bar the door, because that's going to guarantee that $100 billion is going to stay and get a lot larger. And again, you talk about these small nimble people getting in first. And I just keep looking at these numbers and I'm going, today someone could buy 21,000 Bitcoin. That's assuming it was available for sale. Let's say they came in on a bad day where everyone's selling. 21,000 Bitcoins is about $150 million. That is chump change. And 21,000 Bitcoins would make you guaranteed to be one of the 1,000 largest holders in history. And more likely, you'll probably be more like one of the top 500. And that's not a lot of money. So someone is going to do that at some point. Now, finally, I want to ask Simon if I am, quote, missing something when I describe the current Bitcoin malaise as history's first ever bear market with no bad news. Frankly, I cannot see a single issue to be worried of, as unlike last year when real, genuine issues were unresolved, Bitcoin appears to have passed the point of no return in its development. Scaling, competitors with quotes around it like Bcash, governmental attacks, and numerous other issues that either were or seemed to be important last year are no more, and frankly aren't even news items anymore. Thus, aside from simply having to deal with the requisite consolidation of the winter's epic price explosion, I cannot conceive of a single reason why Bitcoin's price shouldn't be rising shortly and sharply, let alone why the Mayer multiple, i.e. spot price divided by the 200-day moving average, is trading more cheaply than 92% of the time Bitcoin has existed. So, Simon, tell us your view on Bitcoin's current risk-reward profile. Is this, in fact, a bear market with bad news that must inevitably reverse course, or is there something big and sinister to worry about?
Well, with crypto, you never really know, but Bitcoin has stood the test of time for every kind of challenge that everyone could come up with. It throws at it and it comes back stronger. So it's become a very resilient asset class. Now, I know that if you're sat there as a traditional fund manager and saying Bitcoin's from 20,000 to 5,000, that's unheard of in our industry. That's not even acceptable. I completely understand that because this is a very different thing to what many people are used to. But there is no real fundamental value other than we got a giant enormous sense of jumping on Bitcoin, and obviously we had the ICO bubbles and all those other types of things come along, and that drove a lot of people out of the fear of missing out that didn't necessarily understand the economics, that are going to sell the second that anything happens that might actually make their wife wrong, that was shouting at them for buying that investment that they still haven't told people that they're sat on they haven't told their wife that they're sat on the 70% loss yet, that they're hoping to turn around, and that might drive them to sell at the bottom. That's all that's really happened. In terms of news, it's really the same thing as usual. What is in the way of Bitcoin achieving its goal? Well, it just needs time to solve scalability, governance, and privacy challenges. Those have always been the same things, and we've got some of the greatest computer scientists in the world that are chipping away at those problems one step at a time. We've made great progress on the scalability side. It's not a challenge, but if we started to hit, the same levels of usability that we had last time, then we need a bit more time for the industry to catch up, implement some of the protocol level changes that have happened into their wallets, their exchanges, their systems, their solutions, and everything that entrepreneurs are building. We've still got I think the governance issue is an interesting one with Bitcoin, because I think it's really been solved. People just know that it's very, 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 very hard to make a change in Bitcoin, and that's by design, and that's why it's the only one that's going to be sound money. In terms of the privacy, it seems like second layer solutions are a privacy solution, and the developers are working on further solutions, and it's really just business as usual. Those are the three things that constantly need to be improved in order to scale at larger and onboard more and more people into this industry. Is there any specific bad news at the moment? I just see nothing but improvements in all those matters.
Right. So again, the biggest bad news with quotes around it is Bitcoin simply needs time. And it's used its time very well these 9 years to get $100+ billion market cap and to get all of its scaling debate wars done. And now it's just about growth. And frankly, as you said, it needs the time to not worry about support tickets at Coinbase. It needs the time to grow. And man, is it using that time well. So to that end, let's conclude today's podcast featuring one of the industry's most knowledgeable educators and successful entrepreneurs, Simon Dixon, who can be found on Twitter at @SimonDixTwit with 2 T's, and his website, BnkToTheFuture.com with no A